Natural gas futures closed last week on the defensive, with the front-month contract settling at $2.99, marking a 3% weekly decline. Initial buying sparked by extreme heat in parts of the U.S. quickly lost momentum as focus shifted to elevated production, ample storage, and forecasts calling for milder weather ahead. Technically, the outlook stays bearish, with prices holding well below the 50-week simple moving average of $3.33. Early forecasts had pointed to strong cooling demand from intense heat in the central and southern U.S., but updated models have shifted toward milder conditions in key demand regions. Traders also monitored potential tropical activity, which could impact consumption more than supply, but so far no hurricanes are visible on the horizon. With record high production persisting and storage levels above the seasonal norm, speculative long positions have continued to face steady selling pressure. Meanwhile, all eyes are on Thursday's storage report, which is expected to be sharply bearish, potentially coming in around 22 billion cubic feet above the seasonal norm. Such an outcome could pour more fuel on the bearish fire and add further pressure to prices as the week unfolds. Moreover, Friday's report showed the natural gas rig count barely moved, with only a 1-rig decline. This minimal change does little to curb the market's supply outlook, leaving production levels largely intact and adding to the near-term bearish pressure on prices. From a technical standpoint, the downtrend remains firmly in place. The first key resistance lies at the 50-week moving average at $3.33, and regaining that level would be essential to easing the bearish bias. On the downside, major support doesn't appear until $2.50 on the weekly chart. With little in the way of intermediate support between current prices and that floor, the market remains exposed to deeper losses if selling momentum picks up. Technically, gas futures are slightly oversold at the moment, which could allow for a brief rebound. However, traders should remain cautious with long positions unless the market can secure a decisive close above $3.33. Don't forget to like, drop a comment, and check out the previous video to help support the channel. See you in the next one.